Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pump on the Bitcoin chart, guys. If we do take a look at altcoins, we do see that they are popping off, as we've mentioned in the Discord, the group discussion, and there's a link in the description of the video below that many altcoins were just front-running this move by Bitcoin, and often that's a good sign. It suggests that, smart money may have some type of insights as to what's going on. And of course, it's easier to move altcoins than it is to move Bitcoin. So if you see some of those, nice altcoins just having some pretty good movement there, something could be up, especially if we're sitting at a nice support. Guys, let's go ahead and jump straight over to the charts. And as you can see, every time we are above this teal Bollinger Band midline, we are in a bull market. Bull market, bull market, bull market, bull market. And we did, of course, lose that Bollinger Band midline there on the weekly as of a few days ago when we dropped below that critical number that I've been pointing out for the last couple months, which is $28,000. And so, guys, as long as we're under $28,000, I am going to have just a slightly bearish perspective on the market until we get some type of correction that brings us back above that key level. And that key level is important, okay? All of our stochastics are going to be pivoting around 28,000. And should we get above 28,000, it will give us a general bias across every time frame, Alpha Fam. Every time frame, it's going to give us a bias to the upside. Now, currently, you can see that on the weekly here, we are holding support on the 200 EMA. That is a very difficult EMA to break through. You can see we've tried it once. Now we're trying twice. Are we going to get some type of mean reversion, not really be able to hold on to 28 and then come back down, create essentially some type of head and shoulders here perhaps, that then brings us down to this 300 EMA somewhere at 22,000. That's entirely possible. Alpha Fam, how do we overcome this? Basically, it's going to be confirmed. Should we get above 29,500, I would say that's a pretty good confirmation that we're likely to continue to the upside. There could be some wiggle room there on a closing basis, maybe, just under, and on a wick basis just over. But again, our crucial level to recapture is 28,000, and currently we can see that the weekly 200 simple moving average is at that level, and so our EMAs are giving us confluence to our price action there and our stochastics. Now I am going to just clean up the chart really quickly, and let's go ahead and just pull down to the daily level. Well, you know what? Let's do something else. Let's go ahead and put the weekly back on there, and let's just take a look at those monthlies that I was showing you last episode, because we do want to make sure that you do have a good comprehension of what that means. So as you can see, that as long as we are underneath the momentum pool here, which is approximately 27,000, let's just say 600, and then you can see the neutral point of control on the monthly is at 28,000. As long as we're underneath that neutral point of control and underneath this momentum pool, we are just not bullish on the monthly, okay? We have more likelihood, more statistical likelihood to get a rejection somewhere around there between that 27 to 28,000, and that would just pull us down into the 3-month volatility pivot or the monthly volatility pivot as we get some type of quarterly backfills or monthly backfills over here somewhere around 22,000 to 23,000. Now this could fluctuate at the turn of the month, but as for now, that's going to be the area that we would be eyeballing, and only if we lost that area, that critical 300 EMA on the weekly, then we would be eyeing, maybe those targets down to 10,000 or whatnot, perhaps with a stop somewhere around 18,000 to 16,000, where we may have another chance. And of course, we could always wick down there to 20,000 and we really wouldn't have violated anything in this area. So we could give ourselves a range of between 24 to 20,000 and just kind of hone in on that $22,000 area as where we would like to eyeball, assuming that we continue to fall, assuming that this 200 EMA on the weekly breaks. Okay, that's going to just push us past this big alpha energy line here, and so the intensity of the move will actually increase, unfortunately. Now, as long as we hold above this, and should we be able to recapture that 28,000, then it's just a hop and a skip, assuming that we're able to close it before the end of the month above 29,230, and that could suggest continuation to the 6-month volatility pivot or the bullish control zone, perhaps here at somewhere in the mid 30s to perhaps even in those lower $40,000 areas where we do have some fair value gaps, and so that would be a natural target, somewhere around, let's just say 35,000, just to be very conservative. At this point, we are nowhere near recapturing these levels, so we have a lot of work to be doing, Alpha Fam, assuming that we want to just keep going. Now we are 26,769 as we speak, and so we are pushing up on that, that daily push that I did mark out here. If we just get out of the monthly and look at this, look at this last daily chart that I did make for the group, and perhaps this was in the last episode, I did suggest that if we were able to hold this line, this momentum line here around 26,000, that we could retest the volatility pivot somewhere around 25,900. You can check the last episode. I did mention that. We did wick down there, gave a little bit of a scare to the market, but on a closing basis, we did close above that volatility pivot, giving us a bias to the upside. We did recapture that hold momentum, and then sure enough, boom, we're just pumping up here to the daily 300 right now. Maybe we're going to have a little bit of a pullback, but I would suggest that there is a high likelihood, that we do just continue to fiddle around in this area. Now you do see the 200 EMA, the 200 SMA, and the 300 EMA all bunched up right there. So that, again, is a tough nut to crack. If we do take a retest of the lows, again, it's just similar to like the weekly perspective. It's hard to break those big EMAs in just one go. So this may have a lot of power to it, and it may just be able to do it because we do have a 9 EMA, 4 EMA squeeze. Of course, that's my signature EMA there, that 4 EMA. I do use it to front run the market. And so this is a beautiful squeeze that could just pop us out of this momentum pool. But again, this is a very tough nut to crack, especially when you have all three of these big daddy EMAs right bunched up around each other. And so if we do just get smacked down from that pool and retest the lows, no skin off our back as long as we hold these volatility areas. Now, guys, I do want to update that daily pool so you can see, in fact, that with the update as of today, that volatility pivot moves up to 25,989. So essentially 26,000 flat is the number that we don't want to lose. And we have actually pushed through the general continuation, which means the MACD is now flipping bullish on the daily. And so MACD traders are going to get a little bit excited. And of course, in order to have that added momentum to the upside on a closing basis, guys, we are intraday right now, but on a closing basis, we do need to hold above 26,625. So we're still kind of operating on the old chart until this day closes, but should we close above this top green line here, above the momentum pool, above the volatility pivot, that's going to be a bullish, and then should we be able to capture that 9 EMA and that 300 EMA, that's going to be really bullish, and maybe we could just pull ourselves out of the bearish control zone at 27,000, a little bit of a pop to the 200s up here, and where we may just find a little bit more struggle. And that could just, start curving us or slowing down our momentum as we head into the Bollinger Band midline on the daily, which we would need to capture to get that neutral point of control. And then should we be able to get this zone, then I would say, aha, bulls are starting to get the advantage. And that's, of course, around $28,000, 28,226 to be precise on the daily there, should we be able to, for some reason, pop up there. Otherwise, I'll need to give an update later. Now, if you want just a little bit of a taste of what's going on the 6 hour for you shorter term traders, you can see that we are just popping up here and getting a little bit overheated on the 6 hour. So I am on the 6 hour chart now, and you can see that we do have this momentum pool where if we do re-enter it, then we do have that danger of just dropping down here to around 24,920. Now, what could that suggest? Like, why would the pool extend lower than the price action? Well, what could be happening here is that we could be being put in a position to build up some type of divergence where if we do get a lower low on the price action here, but our RSI is putting in a higher low. Should we have a pullback on the RSI, this is going to give us another drive of bullish divergence. As you can see, the 6 hour is popping out of the bearish control zone already. It's popping above that neutral point of control on the RSI. And should we just have a little bit of a pullback because we got a little bit excited here, a little bit overheated, if we get pullback to this kind of midline on the RSI, then that would perhaps just drop this price action a bit lower, and maybe we would get some type of nice bullish divergence that just could just fling us to the upside. Okay, so I wouldn't necessarily be too scared on a 6 hour basis, and it doesn't have to be this 6 hour, it can be a couple 6 hours in the future, right? Where if we do pull back into this momentum pool underneath 26,541, and should we get below that volatility pivot, 26,000, right, that critical number on the daily, then as long as we're just kind of flash wicking down here to 25,000, just putting the fear of God in traders, basically clearing out those long positions, liquidating people, that could just send us, assuming that we don't violate essentially 25,000. So just like I said last episode, as long as we hold 25,000, I'm still going to be bullish. However, just to be very secure, we want to hold on to 26,000. And of course, we are looking to get above 27,000 to capture those neutral point of controls, and 28,000 to capture it on every time frame, okay, every time frame. And then 29,000, roughly 300, 29,200 is going to confirm bullishness on most of those time levels, okay? So we are looking forward to a mean reversion here. Guys, if you did take these plays, then you're absolutely killing it. But of course, there's no shame in just being conservative and waiting to see what type of structure plays out there. Now, if we do just kind of a recap of what's going on in the market, it is a very complex setup that we have here, okay? Now, I did put this in the Discord, so if you want to check out the link in the description of the video below, you're more than welcome to join the discussion. And what you can see is that we do have this kind of macro kind of, it's basically a broadening ascending wedge here, which could have a target as low as 18,000 should we violate what would be a double top right here at 25,000. That's why 25,000 is so critical, and I've been saying this for weeks. It's not something that was just last episode or anything. 25,000 is really critical. Now for this a higher area up here, that was 28,000 was critical, and so of course losing 28,000 did just send us just a hair above 25,000, and if we lose 25,000, then game over, man, right? We're gonna potentially see that 24 to $18,000 area, and we would be targeting liquidity around this daily fair value gap, or this quarterly fair value gap, somewhere between 23,000 to 21,000, with a special note that there is a CME gap at 20,000. And then of course this larger pattern, if it really wanted to play out as bearishly as possible, would see us somewhere around 18,000. I don't personally see us going lower than that. I don't really have the argument for it right now. And in fact, on a daily basis right now, I'm actually a little bit bullish. So again, like the Bears, they had their chance and they weren't able to continue to push us lower. Yeah, maybe we have another week or so to give them a fair chance, kind of like over here, right, where we pushed down. We got a nice mean reversion pop up. We went sideways for a little bit. We got that little second down, right, created a divergence. We popped up for another mean reversion, a bigger one. And then Bears just proved themselves and they brought it down to another level. Could something happen like that? We're here, we pop up and then maybe we have a little pullback, go sideways for maybe a week, get that divergence that I was talking about, try to go higher, grab that daily fair value gap that's on the upside, and then could Bears just bring us back down to maybe these 20 areas? Yeah, that's really possible. So you're going to want to make sure that you take your profits here. These aren't necessarily bullish setups that we have here, again, unless we recapture 28,000. And it's not confirmed unless we get above that $29,000 area. Okay, guys? So I do know what's going on here. I've done a lot of analysis. We've got the fibs, we've got the different patterns, we've got the price action. I'm also taking a look at momentum and volatility, and of course, the fair value gaps. We've got the smart money concepts coming in here. We've just got a lot of things going on. We've got the EMAs on the high time frames, on the low time frames. We're looking at the stochastic, we're looking at the MACD, we're looking at everything. So this is what I got for you. And, don't get overwhelmed by it. It doesn't have to be that complicated, okay? We were able to hold. All right, I'm just going to go ahead and just to jump back to the daily, we were able to hold our daily floor, that daily volatility pivot of around 26,000, on a closing candle basis. It's okay if we wick down there, but on a candle closing basis, we were able to hold that. And as long as we're able to recapture 27,000, we're out of the bearish control zone on the daily. Okay, it's that simple. Other than that, we're just swimming around underneath these big daddy EMAs, right? The 300, the 200 EMA, 200 SMA, and we're just kind of swimming around under the 9 EMA. That's not the strongest look, okay? We want to be above that 9 EMA on the daily, okay? We want to be above that bearish control zone at 27,000, and then we quickly want to pop up above 28,000 to get above the neutral point of control. Why? Because that puts bulls back in charge. When we're above the neutral point of control, underneath it, bears are in charge. Above it, bulls are in charge. So it's just a very simple concept to understand. 20,226 bullish. Underneath 28,226, we could be having mean reversions to the upside, but still bears are in charge. And then bears are just dictators, right? Underneath 27,000. And this thing could easily just refine the floor or capitulate again, especially if we lose that volatility pivot at 26,000. So 26,000, 27,000, 28,000, 29,000. I don't know why the numbers are so round, but those are the numbers that you're looking for. It's not always that clear, but it's very, very clear today. Okay, so I think I'm going to stop there. Guys, that's your alpha for the day. Stay safe and happy trading.